Good afternoon, fellow investors. If you're new here, I'm Dividend Damien, and today I'm going to show you 10 high-growth dividend stocks that pack a powerful punch. I'm diving into 10 investments that combine the best of both worlds: consistent dividend payouts and explosive growth potential. But I'm not about to serve you just any old dividend stocks. Oh no, my friends, these are the cream of the crop, the 24-karat gold standard investments that have passed through my stringent criteria. I know what you're thinking. Is it even possible to find companies with solid fundamentals and high yield dividends? Isn't that like finding a unicorn frolicking through the woods? Well, grab your investing hats because I think I've cracked the code. I've combed through financial reports, analyzed market trends, and talked to the smartest investors that I know to bring you this list. I've looked for companies that have shown these 5 qualities: a proven track record of not just paying dividends, but increasing them; stocks with high dividend coverage, so earnings that are at least double what they pay out in dividends; consistent revenue growth over the past few years; a solid ROA, return on assets, and ROE, return on equity. So companies with the ability to grow using the money that doesn't get paid to shareholders as dividends. I've combined all these factors to make sure that these stocks are poised for both growth in their dividend payments and share price appreciation. I don't want to rant any longer, so let's jump into the list. And I've got 10 stocks to show you, so I'm going to go pretty fast. Number 10 is STT, State Street Corporation. State Street offers institutional financial services. Say if you wanted to launch your own ETF, you'd hire a company like State Street to help you do that. Let's go through some quick metrics. They've got a current share price of $67.58, a PE ratio of 9.15, an estimated dividend yield of 4.07%, and a market cap of $21.59 billion. So I'm going to jump over to the dividend history, and you can see here that since Q1 of 2021, they've paid a consistent dividend every quarter. So it's gone up from 52 cents, increased to 63 cents, and now it's at 69 cents, which is the most recent quarterly dividend payment. So looking for steady dividend payments and dividend growth. And if we jump over to the earnings history, you can see that this company is consistently profitable. So the earnings per share are steady. They have their ups and downs, but despite the change in share price, the earnings are consistent, which is what we want. And then most importantly, for dividend growth, we want to look at the dividend payout ratio. I usually look at this current trailing 12 months. So this is the total dividend payments in the past 12 months divided by how much money they've made in profit in the past 12 months. And that number is 37%. So you can see that they have quite a bit of earnings left to invest into the company to continue to grow and to grow that dividend in the future. All right, next up, number 9 is TPR, and this is Tapestry. Tapestry owns luxury brands such as Coach and Kate Spade. They make handbags, wallets, watches, and other accessories. Let's go through some quick metrics. The current share price is $32.93. The PE ratio is 8.53. Estimated dividend yield is 4.23%. And the market cap is $7.53 billion. And if we look over here at the dividend history, you can see for about the past 2 years, they've had a consistent dividend payment, and that dividend payment has gone up. It looks like they're raising it once a year. If we look at the earnings history, you can see there is a bit of fluctuation in earnings, but this company is always profitable. So we want to make sure we're buying profitable companies. The share price did drop whenever earnings dropped, but overall, it's pretty consistent earnings. And if we look at the dividend coverage for TPR, you can see we're right around in the same spot. So this current trailing 12-month dividend coverage is 38%. So that means only 38% of their net profits are getting paid out in dividends, leaving room for dividend growth and share price appreciation. Next up, number 8 is PFE, Pfizer. Pfizer manufactures pharmaceutical products, most notably COVID vaccines. Let's go through some quick metrics. So they've got a current share price of $36.60, a PE ratio of 9.63, an estimated dividend yield of 4.53%, and a market cap of $204.16 billion. If we look at their dividend history, you can see a very consistent dividend payments. Not as much dividend growth as we saw on some of these other companies, but still it is slowly growing. And if we look at Pfizer's historical earnings, you can see they have had some spikes and some downs in earnings. The earnings are currently down, but the PE ratio, you're still getting good value for the price that you're paying for this stock. If we look at Pfizer's dividend coverage, they're at 44% of the current trailing 12 months earnings are being paid out as dividends, which is pretty low. We still have a healthy margin there for them to reinvest in the company and continue to grow that dividend. All right, next up, number 7 is MDC, which is MDC Holdings. MDC is a home builder through the brand Richmond American Homes. They buy land and build single family houses and then sell them to usually first-time home buyers in states like Nevada, California, Texas, and a bunch of other places in the US. Let's go through some quick metrics. Their current share price is $44.91. They've got a PE ratio of 8.53, an estimated dividend yield of 4.78%, and a market cap of $3.43 billion. If we look at the dividend history, consistent dividends being paid on MDC and consistent dividend growth. It has been pretty flat over the past year and a half or so, but they did just recently raise their most quarterly dividend. If we look at the MDC earnings history, so they are in a slump in earnings, which is probably why the share price is down a little bit, but I don't think new home sales are going anywhere with the continued shortage of homes in the United States. And most importantly, this dividend coverage ratio, so we're at 41% of the current trailing 12 months earnings are being paid out as dividends. Still, lots of room to grow this dividend and lots of room to continue growing this company. Next up, number 6 is VTRS, and this is Viatris. Viatris is a healthcare company that offers prescription drugs and operates in the United States, China, and India. Let's go through some quick metrics. They've got a current share price of $11.01, a PE ratio of 7.18, an estimated dividend yield of 4.38%, a market cap of $13.13 billion. Then we'll jump over to the dividend history. So not as much dividend growth on this one, but they do have consistent dividend payments, which is what we want. But Viatris does have very consistent earnings. You can see not much earnings slump here over the past few years. Pretty consistently profitable company. And most importantly, they have a very low dividend coverage. So they're only at 31%. So they could pay out 3 times higher dividend and still have cash left over. Number 5 is MOV, the Movado Group. Movado designs and sells luxury watches, most notably under the brand Movado, which I'm wearing right now. And they also have MVMT watch brand, which a lot of people are familiar with. Let's go through some quick metrics. They've got a current share price of $26.12, a PE ratio of 7.03, an estimated dividend yield of 5.33%, and a market cap of $409.49 million. If we look at the dividend history, this chart looks a little funky, but the thing is they're paying quarterly dividends and they haven't missed any. It's just sometimes the dividend payments get considered to be in the same quarter. So they've had good dividend growth the past few years. It's stabilized a little bit over the past year or two. It hasn't grown as much, but they are offering consistent dividend payments. Movado earnings are currently down right now, but the luxury watch market is pretty down overall as a whole. But most importantly, they have good dividend coverage. So even with the drop in earnings, they're still well covering their dividend. It's probably why they haven't raised their dividend. But if their earnings can get back up, you could expect some dividend increases, and there is a lot of cushion in there for them to do that. Next up, number 4 is ETD, Ethan Allen Interiors. Ethan Allen Interiors is a manufacturer and retailer of home furnishings like beds, mattresses, tables, office furniture, etc. Let's look at some quick metrics. They've got a current share price of $30.86, a PE ratio of 7.45, an estimated dividend yield of 4.67%, and a market cap of $781 million. If we look at the dividend history, a very consistent dividend from Ethan Allen and consistent dividend growth. So they didn't have a dividend raise in 2022, but they have had one this year and the year before that. So it doesn't need to raise too fast, but you want some dividend growth and consistency, which you have both of them here. Ethan Allen earnings are even more impressive. So they haven't had really any slump in earnings. They had a spike there, but still very consistent and very profitable company, which brings us to the dividend coverage of ETD, which is 35%. So only 35% of their net profit is being paid out to shareholders in dividends. The rest is getting reinvested into the company to continue growth. All right, next up, number 3 is CMRE, Costamare. Costamare is a shipping container company. They own and charter ships that send goods mainly from Asia to the rest of the world. Let's go through some quick metrics. They've got a current share price of $10.20, a PE ratio of 2.51, which is very low, an estimated dividend yield of 4.47%, and a market cap of $1.21 billion. If we look at CMRE's dividend history, so not much dividend growth here, but very consistent dividend payments. The earnings are in a little bit of a slump, but still it's a consistently profitable company. And this is what I really like about this stock is the dividend coverage. So they're making almost 10 times as much in earnings as they're paying out in dividends. So a lot of room to increase this dividend if they really wanted to, but I'm sure they're investing it back into the company to buy more vessels and to continue revenue growth. All right, number 2 is EPM, Evolution Petroleum. Evolution Petroleum is an oil and gas producer. They own and operate onshore oil fields in Louisiana, Wyoming, Texas, and North Dakota. Let's go through some quick metrics. They've got a current share price of $8.81, a PE ratio of 5.87, an estimated dividend yield of 5.45%, and a market cap of $292.76 million. EPM has a very impressive dividend growth history. So you can see the dividend is up almost 4 times as much in the past 2 years. So it's went from 3 cents to the current dividend is 12 cents. And it's been pretty consistent for the past year. Good dividend growth there. The earnings have also been strong. So EPM, a very profitable company and a growing company. Also very strong dividend coverage from EPM. Currently at 32% of their earnings get paid out as dividends. And my number 1 dividend growth stock is PFC, Premier Financial Corp. Premier Bank, it has 75 branches. They operate in places like Ohio, Indiana, Michigan, Pennsylvania, other places like on the East Coast and Midwest. Let's go through some metrics. They've got a current share price of $18.48, a PE ratio of 5.58, an estimated dividend yield of 6.62%, and a market cap of $668 million. Dividend history for PFC, you can see they've had some consistent but kind of small dividend growth, not like the last stock, but very consistent payments and consistent growth. The earnings also, they've had consistent earnings. They had a big earnings beat last quarter. You can see they made more than double what the analysts expected. So even with the rise in interest rates, this company is still very profitable. The dividend coverage is right along the lines of what we're looking for. 37% of their earnings get paid out as dividends. So they have a lot of room to continue raising their dividend and to make sure they don't miss a dividend payment. All right, that's it. Thanks for watching, everyone. I hope you enjoyed this video. If you want to keep learning more about dividend investing, make sure you subscribe to my channel, Dividend Damien. And just a little disclaimer, this is not financial advice. I'm not a financial advisor. I'm showing you what I've learned through my research, and you should certainly do your own research as well before you buy any stocks.